Hello there, it's the 2nd of September 2015. My name is Jack Watts, I'm the lead market analyst for AHDB, cereals and oilseeds. I'd just like to spend a few moments taking you through a oilseed market update, and to start with we'll take a look at some prices. Now, it's fair to say that oilseed prices, not just in the UK but around the world, remain fairly subdued due to a number of factors. It's quite poignant at the moment from a UK point of view. So a lot of farmers now have planted their oilseed rape crops for harvest 2016. It's very difficult to see at current prices how, if any, profit will be in those crops without a substantial increase in price. So it's quite a concerning time for the profitability of oilseed rape from a UK production perspective. A lot of the downward pressure from price has been coming from soybeans. We'll look at some of the fundamentals behind that as well, with some bearish downward price pressure coming from the sentiment from what's happening in China. Over the last decade or so, China has basically become a huge importing powerhouse of soybeans, and any confidence shaking of what's happening in the global economy has knock-on impacts into the oilseeds market. At the moment it's all about the Chinese stock market, but there's quite a lot of uncertainty about what that actually means for Chinese growth, what that actually means for Chinese commodity demand. That's not really the point at the moment. The point at the moment is really impacting sentiment across lots of asset classes, commodities included. Back to the fundamental of what's happening in oilseeds market, and a lot of that bearish pressure is coming, downward price pressure is really coming from what's happening in soybeans. When we think about soybeans, we have to think about the two production regions of North America dominated by the US, and South America really dominated by Brazil to an extent. As the next chart shows here, we were looking at some pretty hefty production forecasts for this marketing season for soybeans, but actually that supply is not yet secure. If we look at the US, that crop's not being harvested yet. The harvest is imminent, and the market is going to take a keen eye, probably more than usual, over how the US harvest progressed, largely because it was been a tricky start to the US soybean growing season, very wet conditions, some late planted soybeans, and really what we saw in the USDA data in the middle of August was some unexpected changes in yield and indeed production that kind of caught the market by surprise. The market, a lot of market participants are struggling to sort of buy into some of the yield expectations portrayed by the USDA. Nonetheless, that's the reality that the current forecasts stand, and so the market's going to want to see if that actually comes true. South America is very interesting. So the South American production numbers are in the estimates, but we need to remember that those crops aren't even planted yet. And so again, the market's going to take a very keen eye over how well the South American soybean crops are planted and how well they grow. There's an El Nino impact here. El Nino typically brings wetter conditions to South America, so in essence, on the surface that would appear to be supportive of soybean production, but it could easily get too wet, as we've seen in the North American spring this year, or the US spring this year. So there's still quite a lot of uncertainty, so it's important that we don't get too complacent towards the soybean market, because there's still a few things that can pan out really as we go through the autumn and into the winter. Really stepping aside from the soybean market, really we have to consider what's happening with the other oilseeds and what I would sort of dub the high oil yielding oilseeds. So we're predominantly talking about oilseed rape and about sunflower. These oilseeds have higher oil contents than soybean, and have really suffered in terms of price over the last 18 months or so, largely because of the very weak vegetable oil market. Really, the vegetable market's being dragged down by an abundance of palm oil supplies, prices reaching a 6-year low in recent days, and really also the weak crude oil prices, which has made sort of free market biodiesel blending very, very difficult indeed. And so there's a real competitive market in the veg oil market as well, which is having a much bigger impact on oilseed rape and sunflower than it is on soybeans. In response to that, the supply and demand looks to be tightening for those high oil yielding oilseeds as a result of the poor economics, farmers coming to plant the crop for this harvest, but also because of some specific weather issues as well, for difficult conditions in Canada. And Canada's interesting now. It's had a difficult growing season. Production is going to be down more than 2 million tonnes year on year to just over 13 million tonnes of oilseed rape. and kind of as a key supplier of the commodity to the global oilseeds market as well. So that's a real one to watch, and that's an extent helping to support oilseed rape prices relative to soybean price. Essentially means that oilseed rape prices aren't falling as fast as soybean prices in recent weeks. To sum all this up, what are we going to look for in the next few months? What are we're looking for? Well, we're looking for some harvest reality. We're looking for what the actual soybean production looks like in the US. Is the USDA right, or did the market call it right before the data? Who's going to win that battle? And only time will tell. So that's definitely a risk factor. How will that Canadian oilseed rape crop look? How will the yields be impacted? We're getting to the time of year now where frosts become more likely, and how will that impact some of those later crops? So there's definitely some risk factors there. Longer term, the market then looks to what's happening in South America. How well is that crop going to get planted? How well is it going to grow? It's interesting. Brazil, for instance, we've seen such a weakening in the real through 2015 that although in dollar terms soybean prices have fallen, in real terms they've actually risen. So that may well counteract some of the negativity. And in fact, Brazilian farmers may well be seeing an additional incentive to plant soybeans. Nonetheless, margins are likely to be relatively tight year on year. Also, we need to look at the bigger picture of what's happening with El Niño, as we touched on earlier. But what does that mean for palm oil production? At the moment, the world is awash with palm oil, and there's no real concern at the moment about what any potential impacts of El Niño would have. In addition, we need to be careful and just keep an eye on what it means for Australian production in terms of canola oilseed rape. But time's running out really for El Niño to have an impact on Australian production. We need to see that dry weather conditions happening in September and October really to really have any yield impacts of any kind of magnitude. So it remains quite uncertain. The market remains fairly subdued at the moment, but we mustn't get complacent. The recipe for volatility remains in place. As usual, in this year's Grain Market Outlook Conference, we're providing a full insight into the oilseeds markets, but also we'll be giving a macroeconomic feel as well, looking at how China is developing, look at some of those key issues impacting some of those big economies of the world and what that might mean for grain and oilseed markets. That's the 14th of October 2015 in London. It'd be great to see you there. Thank you.